Welcome to the CFA Level 1 Practice Test 1. Domain: Corporate Issuers. Which financial ratio is most useful for assessing a corporate issuer's ability to meet its contractual interest payments? A. Return on equity. B. Debt-to-equity ratio. C. Interest coverage ratio. D. None of the above. Answer is C. Interest coverage ratio. Why does the constant growth dividend discount model assume the dividend growth rate is less than the required rate of return? A. To ensure that the company remains profitable. B. To ensure the calculated intrinsic value is finite and positive. C. To ensure dividend payout ratios remain stable over time. D. Not applicable. Answer is B. To ensure the calculated intrinsic value is finite and positive. What is the primary output when using Monte Carlo simulation in capital budgeting? A. A single-point estimate of the project's IRR. B. A probability distribution of the project's net present value. C. The expected value of the project's underlying input variables. D. All of the above. Answer is B. A probability distribution of the project's net present value. Which CFA Institute standard is most likely violated if a board member uses confidential information to advise investment decisions before the information is public? A. Standard I. B. Independence and objectivity. B. Standard 2. A. Material non-public information. C. Standard V. A. Diligence and reasonable basis. D. None of the above. Answer is B. Standard 2. A. Material non-public information. Agency theory in corporate governance primarily addresses conflicts arising when A. Shareholders and debt holders have different risk preferences. B. The interests of managers diverge from those of the shareholders. C. Customers and suppliers have opposing negotiation objectives. D. Not applicable. Answer is B. The interests of managers diverge from those of the shareholders. Which statement about goodwill impairment accounting is most accurate? A. Goodwill impairment losses are reversible under IFRS. B. Goodwill impairment losses are reversible under US GAAP. C. Goodwill impairment losses cannot be reversed under either IFRS or US GAAP. D. None of the above. Answer is C. Goodwill impairment losses cannot be reversed under either IFRS or US GAAP. A CFO who directs the overstatement of revenues and understatement of expenses to meet targets is most likely violating which CFA standard? A. Loyalty. B. Misrepresentation. C. Diligence and reasonable basis. D. Not applicable. Answer is B. Misrepresentation. Agency problems exist primarily due to a. Complete transparency of agent actions. B. Shared information symmetry between parties. C. A divergence of interests between principal and agent. D. None of the above. Answer is C. A divergence of interests between principal and agent. A company's current ratio significantly above industry average is least likely to indicate a. A high level of liquidity. B. Efficient use of the company's assets. C. A relatively low risk of short-term insolvency. D. Not applicable. Answer is B. Efficient use of the company's assets. In WACC calculation, which capital component's cost is typically adjusted for corporate income taxes? A. Cost of debt. B. Cost of common equity. C. Cost of preferred equity. D. None of the above. Answer is A. Cost of debt. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.